Hello and welcome to the weekly Forex Review here at xm.com. I'm Andreas, your currency analyst, and I'm here with our chief economist, Michalis Frondiadis. So, Michalis, arguably the most important data release of the week was today's non-farm payrolls report. Before the release, it was yet another poor week for the dollar. We've seen the dollar index falling to fresh 15-month lows below the 93 handle. Dollar weakness came on the back of uninspiring data and on political turmoil in Washington. Can you talk to us about today's release?
Yes, the release was definitely stronger than expected, at least on the headline level, but I would characterize this as a solid report. And what do I mean by that? There was strength across the board. And when I say across the board, we are talking about the number of jobs. They were above 200,000 in the month of July versus 180,000 expected. We had a 0.3% increase in average hourly earnings, which again is a very good solid pace of wage growth. We had unemployment ticking down at 4.3% from 4.4% last month, but significantly the participation rate also increased from 62.8 to 62.9 from 62.8% the previous month. Plus the revisions were slightly positive. So what I would say about this report, that it should have provided a significant boost to the US dollar. It did provide a boost, but I think it is telling that the market psychology towards the dollar is so negative that the dollar's gains were not as strong maybe to reflect this across the board strength in the employment report. And as you have mentioned, we have had some mixed data beforehand. The ISM, services ISM yesterday was particularly weak and lower than expectations. We've had the political situation. It does not seem to be getting more stable. We are seeing some fresh challenges. Maybe they are not major, but there is like a steady stream of negative news out of Washington and the White House. So I'm afraid that although this report is looking strong and is very good news for the US economy, and it should encourage the Fed to increase rates once in the third or fourth quarter, I'm not sure it's going to be the dollar's salvation. We will see, of course, about that.
So it is not that likely that it will serve as the inflection point that many dollar bulls have hoped for.
At the moment, no, yeah.
And with that, allow me to divert to the euro. It's been yet another strong week for the euro. We've seen it rallying against majors such as the dollar and the British pound. We've seen it rising above the 1.19 handle relative to the dollar. That's a 31-month high, while relative to sterling it rose to a 9-month high. In terms of data, we did have some flash inflation data for the Eurozone for the month of July. We've seen core inflation beating expectations, rising to the 4-year high of 1.3%. We also had some unemployment. We also saw the unemployment rate falling to its lowest since 2009. It stood at 9.1% for the month of June, while we also saw some growth numbers, the preliminary estimates for growth for the second quarter that stood at 0.6% quarter on quarter as expected, but on an annualized basis, that translates into 2.1%, which is the strongest the region has enjoyed since late 2005. But Michalis, I know that you've also been looking at what happened during this week's meeting regarding the Bank of England. Can you talk to us about that?
I think the pound. Has had its challenges because it was maybe slightly on the dovish side what is happening with the UK economy and with the Bank of England, because there was a significant downgrade of the UK's growth prospects according to the Bank of England itself. So despite the optimism that the Bank of England saw about the Brexit process, that is going to be smooth, and also that wages are going to close this gap with prices. We know that real wages have been going down in the UK. It seems that the market is a little bit more hesitant with respect to the outlook for monetary policy, despite the fact that Carney did say that that he was a little bit more optimistic on rate increases than the market had expected. On the other hand, we see the market focusing on the negatives and seeing that the monetary policy is not going anywhere anytime soon. So what can you tell us, Andreas, also about the next week? What are the key points, or is it a summer week that is going to be quiet because of we're going through holiday period in much of Europe and the US?
It's definitely going to be more quiet than this week. Out of Australasia, and starting with Australia, we will see the NAB Business Conditions Index for July being released. In terms of Chinese data, we will see trade numbers as well as producer prices and inflation data for the month of July. Moving to Japan, it will release current account data and machinery orders for June. While in terms of central bank meetings, the Reserve Bank of New Zealand will be holding its meeting next week. It's going to be interesting to see whether it will push forward the timing of monetary policy tightening given this week's poor employment data out of the country. Moving to Europe, Germany will release trade data for June, and the UK manufacturing output for June, and the Halifax house prices for July. And turning to North America, Canada will release housing starts for July, while the most important data for the US will pertain to the JOLTS jobs report for June and final producer prices and inflation figures for July, while we should also not forget that there will be an OPEC meeting in Abu Dhabi next week where the countries participating in oil cuts will discuss about compliance with the cuts, and this also includes some non-OPEC countries such as Russia.
That is definitely going to be interesting given the volatility we have seen in oil prices and how crucial energy prices are for determining inflation. Thank you very much, Andreas. Thank you everyone for watching, and have a great day.